Dear students and working accountants, welcome to my Smart TallyPrime class YouTube channel. Why I am saying working accountants? Because still many of the accountants are working on old version Tally ERP 9, but it is outdated now. The current most advanced and latest version is TallyPrime. So they can also learn TallyPrime thoroughly, and they can change, they can migrate Tally ERP 9 into TallyPrime very easily within 10 minutes without any expenditure. Okay. Now I will, in the last video, we have completed golden rules on how to decide which account is to be debited and which account to be credited. So the golden rules of accounting we have learned. Now again, we will continue that. Now we will take some more examples and which account is to be debited and which account is to be credited. We will continue in this now. So before that, one request to all the people, so all the students and working accountants also, please subscribe to my channel and click the black bell icon next to that, so that and select all, so that you will get all the videos which I upload through notification to you, and also watch all the videos till the end, and if you feel good, you like the video and you share this channel also to all of your friends. And the total channel, this channel, all the videos are totally free. You will get very good knowledge from these videos. I am explaining everything in a thorough manner, not like very briefly. Okay, so we'll get a very good channel, very good knowledge also. Now we will proceed to our class. Here, yesterday, in the last video, we decided which account is to be credited and which account will be credited with some examples. Today we will go to the day 2. Day 2, we will continue that recording of the transactions. It is called journal, that we will come here. So in this case, all the previous transactions, we have decided which account is to be debited and which account is to be credited. In this case, all the entries, there are only 2 accounts in the transaction. One account is debited and one account is credited. Okay, this is called a simple entry. This is called a simple entry. These, in all the above examples, they are called simple entries. Only one account is debited and one account is credited. Sometimes there may be more than one account, more than 2 accounts in the transaction. It means we have to write on the debit side or on the credit side more than one account, and on one side one account, depending on the transaction. Sometimes there will be more 4 or 5 accounts also. In such a case, some accounts, 1 or more, are to be debited, 1 or more are to be credited. Such entries are called compound entries, because we are writing more than one account on both the sides, either debit side or credit side. So they are called compound entries. For that, we will take up one example. For example, purchased furniture for 20,000 and computer for cash for 30,000 rupees. So we purchased totally for 20 plus 30, for 50,000 rupees we purchased for cash. One is furniture, one is computer. In this case, what are the accounts here? Furniture account, computer account, and we paid cash. Even if it is not given, computer for 30,000, if it is given without cash also, it means it is implied that we paid cash. So this one here is given as purchased. Don't see the word purchased and we should not write it as purchase account. Purchases only are for goods only, which is purchased for resale. That is called goods. So we are not purchasing goods here. We are purchasing furniture and computers. These are going to be used in the company, in the office. That's why these are all called assets. They are all real accounts. Furniture and computer, real accounts, and we are paying cash. Cash is also real account. Okay, maybe different accounts or maybe same type also. So in this case, furniture and computer are purchasing. So we are receiving means we are getting furniture and computer. They are coming in, and we are paying cash means cash is going out. So what is for the real account rule, what to do? Debit what comes in. Furniture and computer both are coming in. So furniture account is to be debited and computer account is also to be debited. So in this case, transaction, furniture account debit 20,000, computer account debit 30,000, and we are paying cash. Cash we are paying 50,000, 30,000 rupees, and 50,000 we are paying. So cash account credit because going out. Cash is treated for 50,000 rupees. Okay, no? Similarly, sometimes in future will come some other example. On the debit side, you have two accounts. On the credit side, only one account. Sometimes there may be on the credit side also more than one also. Sometimes that we will take up later. Now, I am giving one more illustration. One illustration I am giving. Here, see, Ramesh brought into business as capital 6 lakhs. He brought into business, the capital he brought is 6 lakhs in total. So all the 6 lakhs is not cash in the form of the following assets. They can bring not only cash, he can bring any assets. If he has some assets, the computers, furniture like that, they can give, proprietor can give to the company business. Okay, here, furniture 12,000, computer 18,000, bank balance 58,000. Say he has a bank account. That amount is transferred to company. So that is bank balance he paid. So he can do anything. He can do any asset. So 18,000, 12,000, bank balance 58,000 rupees. Stock 1 lakh. Stock means goods. Goods which is in with us. That's why it's called stock. Stock 1 lakh. So all these assets and the balance in cash. Total is 6 lakhs. He gave all these assets. After that, the balance in cash. Here you see, calculate. What is the furniture? Furniture is 12,000 rupees. Then computer is, sorry, computer is 18,000 rupees. Then this one is what is it? Bank balance. Bank account is 58,000 rupees, and then stock 1 lakh is giving. So total 1,77,200 in the form of other assets minus 6 lakhs means 4,22,000. No, 800 is wrong. Sorry. 12,000 plus 18,000, 12,000 plus 18,000 plus 58,000 plus 1 lakh. So total is 1,88,000 rupees is paid in all in the form of other assets and balance in cash. So what is the balance here? 6 lakhs minus this one, 4,12,000. So 4,12,000 rupees is the cash and all these assets. So now what to do? All these are assets only. All these assets are coming into the business. What to do? We have to debit all the assets coming in. So here assets are coming into the business. They have to be debited. And how they are coming? The proprietor is giving. So proprietor account is to be credited. But the name of proprietor is to be changed to capital account. See here. Furniture account, debit. Furniture account, debit is missed here. We are given it here. Debit furniture account 12,000. Debit computer account 13,000. Debit bank account 58,000. Debit stock, we will write debit stock account 1 lakh, and at last debit cash account 4,12,000. Total amount is 6 lakhs. Credit capital account. Here remember one thing. This capital account we can write into two forms. One is simply we can write capital account, or next another one is we can add the name of the proprietor also. So Ramesh capital account. Since Ramesh started the business, so we can write simply capital account or Ramesh capital account. Sometimes if there are more than one owner, it is called partnership home. In the case of partnership home, every partner will have a capital account. In such case, you cannot write capital account to everyone. So in such a case, we have to add the name definitely in the case of partnership. But in the case of a single proprietor, we can write simply capital account or we can write with name also. So Ramesh capital account. This is one. Till now, simple entries or compound entries, what it may be, depending on the type of account and applying the golden rules of accounting, we decide what are the accounts to be debited and what are the accounts to be credited. This is what required for us to learn the tally. But in this case, how these are recorded in the books, we are deciding. I told you now, we have to analyze the transaction, identify the transaction, which account belongs to which type, and then we have to decide which account is to be debited and which account is to be credited. That we decided. And then how this is recorded in the books. In the books in the means it is in the manual books. It is in the manual books how they are recorded. You see here. So when these records, these transactions and the entries are made in the book, that book is called journal. The first time, which account is to be debited and which account is to be credited. These debit and credit accounts will be recorded in one book called journal. So in this book, Telugu it is called Chitta Pustakam, we don't need that, journal. See, in this journal, we are recording these transactions, that is which account is debited and which account is to be credited. We are recording for the first time. Yeah, that is why this journal book, name of the book is journal. The journal is also called book of primary entry. First time we are writing. So this book is also called book of primary entry or book of original entry. We are entering for the first time originally. Such way this book is called, journal is also called book of primary entry or book of original entry. Okay. So how the book will be recorded now, what is the pro forma of the book. See here in one page it is like this. So there will be 1, 2, 3, 4, 5 columns in the book. 5 columns in the book. The first column is date, second column is particulars, then third column is ledger folio, then debit amount, that is amount of the debit account. Credit amount means amount of the credit account. Both sides must tally. One or more accounts, total must be equal on both the sides. So these are the columns. So in the first column, date, we write the date. So there is, when you are writing, there is specific pro forma to write the date. To be very easy. First you have to write 2022. Because the 2022 will continue for long term. Every day we need not write the year. That's okay. Next, below that, first we write the month. This month also will be valid for 1 month. So the same month, every day we need not write. And the next one is date. This date will change every day. So only the date we have to change. But for 1 year or 1 month, we not record the transactions in one page. That is why for every page, year and month, we have to write only once in the beginning, and only date only we have to go on writing the new date. And when you turn the page, so that is on the top of the page, we cannot understand year and month. That's why on the top of every first transaction in every page, we have to write the full form. That is the year, month, and date. Until the end of the page, we have to write only the date if it changes. If it changes only every day, second and first again, next again, first another transaction, first only, we need not write all this, just you write ditto. That's all. Okay. In the particulars column, second column is particulars. In the particulars column, we decided which account is to be debited and which account is to be credited. That we had to write. First we had to write, start with debit account. From the beginning, we write the debit account name of the debit account, for example, cash account. And at the end of the column, we write it as DR. DR means debit, but it is pronounced as in the journal. It is pronounced as debtor, not DEB, DETR. It is pronounced as debtor. So this is pronounced as some debit account, cash, for example. Cash account, debtor. And this debit account name, amount, we write in the debit column. So debit amount. This amount we write in the debit amount column. So XX account, debtor, for example, 5,000 rupees. Okay. Then next column, we leave some space in the beginning. Then start with 2. 2 indicates credit account. So we have to write 2 and write the name of the credit account. For example, cash account is debited. We purchased goods, write on the purchases, sold goods. On the sales, we write on the credit side. 2 sales account. So, but cash account, debtor, so and so amount. 2 sales account, and we write the credit account amount on the credit column. So you write it as the cash account debtor, so and so amount. 2 but the sales account, so and so amount on the credit side. So these 2 will be written in different columns. If there are more than one account also, debit time we have more than one. All accounts are debited and written on the debit side. 2, if there are more than one on credit side, 2 so and so amount account, so and so amount. Again 2 so and so account, so and so amount. Like this, we have to write this pro forma. So this is why this is called the book of primary entry or book of original entry, because first we are writing in this one. So this book is called journal. Okay, but we are writing entries in that. These entries are called journal entries because these entries are made in journal. That is why these entries are called journal entries. But actually, in this pro forma, and one column I left it out. So we will learn after some time. In the next chapter, we will learn this one and there. There is another one column there. There and this. These two we will learn in the next column, next topic. So this is done. But this pro forma will be maintained and we will record like this in the case of manual accounting. In the case of computerized accounting like TallyPrime, that will be different. That will be different. But this is the basic idea. Based on this only we will record there. That is why this is the pro forma journal. Okay. Now we will come to it. See, a simple transaction is recorded in journal in the following manner in the above format. In the above format, you will write salary is paid for 50,000. For this, the entry will be salaries account debtor. First, we will write the date. It is not written here. Salaries account debtor 50,000 to cash account 50,000. And one more thing, when I am writing the entry here, after completing the entry in the same particulars column, we will write within brackets brief description of the transaction. Brief description. Briefly, we will write what is the transaction. For example, in this example, I told you, cash account debit to sales. These are sold goods for cash. Now, just simply within brackets, we will write being goods sold for cash or being cash sales. Simply address briefly. Being cash sales. That is called vertical narration. So, narration we have to write in this one. Suppose here in this case, salary is paid. So, in this salary account data to cash account within bracket, we write being salary is paid. That's enough. The salary is paid is enough. It implies cash. Sometimes here, instead of cash, we give check. Through bank, we will pay. To all the employees, we will pay to the bank. Then only we are not paying cash. So bank is paying. Even though bank is paying to outsiders on our behalf, it means it is paying to us. That means we are receiving money from that, and bank is the giver. So bank account instead of cash, we have to create it bank account. So salaries account debtor to cash if cash is paid, or to bank account if paid through bank or check. So being salaries paid, that's enough if it is cash. If it is by check, then we salary is paid by check. In cash is not required actually. So by being salary is paid by check, that we have to write. Okay. So this is the form of journal, and one small example how it is recorded. Hereafter, goods we call it, we write as sales or purchases, returns, etc. And this journal we call it as debtor to, we will write, but actually it is not required. If you decide which is debited and which is credited, that is enough for us, because we write either debit or credit in the tally, right? Okay, so it will be very easy there. You can understand there. So this is the method of recording transactions. So here I have given two practical problems. One practical problem I have given solution also. The second practical problem I have given, try this problem yourself. You try this one, but in this one, second one, there are 2-3 places you will get some doubt. You cannot understand. So first you try that. So you cannot understand that. Except that others you will get. So if you are correct in all the other cases, only two or three which are not really you cannot understand. That I will tell in a later class, next class. But others means others you should be perfect. All other entries you should be correct. Okay. Now see here. Mr. Ramki started business and brought cash 8 lakhs. He brought cash 8 lakhs. It's given completely, not balance in cash. Brought cash 8 lakhs. So 8 lakhs cash he brought. Stock 25,000 and machinery 75,000. Total capital only. So 8 lakhs plus 25,000 plus 75,000 means total 9 lakhs. So he brought capital into the business 9 lakhs. So here what is the entry are right? Is the being cash we are getting. Stock you are getting, machinery you are getting. So cash, stock, machinery, all accounts are to be debited. So here cash account debit, see 8 lakhs, stock account debit, stock we write as stock. Stock account debit 25,000 rupees. Machinery account debit 75,000 rupees. Total is total amount is Total amount is 8 plus 1, 9. So 9 lakhs is the capital. So capital is the name of the proprietor. So it is to be credited. Capital account credit 9 lakhs. Understand? So all these assets are coming in, debited. Who is giving? Owner. Owner account is credited, but in the name of capital account. If the owner gives to the business, we will write capital account. If the owner takes from the business, we will write it as drawings account. Understand the first one? The second one, open the bank account in State Bank of India with 4 lakh. 4 lakhs you paid into bank, opened a bank account with State Bank of India. So here we are giving money, paying money to whom? State Bank of India. It's a personal account. So State Bank of India is the receiver. So receiver account is to be debited. State Bank of India account, debit, debit, cash account, credit. So cash is going out. So State Bank of India account, debit 4 lakhs, cash account, credit 4 lakhs. Next third one. Purchased goods for cash 2.5 lakhs. So we purchased goods for 2.5 lakhs. I told you, hereafter, goods we will write it as purchase or sale. What happened? How the goods are coming and going. But we will not write the name of the goods. Here, see, we are purchasing goods. So goods are coming in, debit. And for cash, cash is paid. So cash is going out. Cash is to be credited. See here. Purchase account debit 2,50,000 and cash account is credit 2,50,000. Understand here? Right, next one. Purchased goods, then purchased computer for 25,000. Purchased computer for 25,000 means purchased for cash only. We are not purchased, it's not given, the name is not given. So if it is credit, the name will be there. If it is this means this is not credit. Purchased computer for cash means implied it is 25,000 rupees is paid in cash. Purchased of cash. Here, the previous purchased goods, we are writing as purchase. But here we are purchasing asset, not goods. Only in the case of goods, purchase, sale, returns, etc. In the case of other assets, we are writing the name of the asset. Here, what we purchase? Computer. So computer coming into the business and we are paying cash, implied. So cash is going out. Here, computer account, debit, cash account, credit. Then, so okay. Then purchase, then sold goods for 1,25,000 to Mr. Raghavan. If it is not given, Mr. Raghavan is not given. What does it mean? Sold goods for 1,25,000 means sold for cash only. But here, name is given. Sold goods for 1,25,000 to Mr. Raghavan. Here in this case, even with this Raghavan, for cash if it is given, in that case, Raghavan is immaterial. If you sold the goods, sell the goods for cash, then personal name is not required. If there is no cash, this is personal account is required. Here we are selling to Raghavan. So Raghavan is receiving goods from us. Receiver is to be debited. Raghavan account is to be debited. Goods going out credit, but not as goods. What you are right? Sales. So Raghavan account debit 1,25,000. Sales account credit 1,25,000. Raghavan is the receiver. Sales means goods going out. Sales account is credited. Understand now? If you have any doubts, watch that video again and again. And then next one. Commission paid to Subbarao. Commission paid to Subbarao. 500 rupees. Commission paid to Subbarao 500 rupees. Here, commission is one account and paid to Subbarao. Subbarao is there and paid means cash is there. In this case, what to do? Here, commission paid means we pay commission in cash only, isn't it? There is no credit for commission. So commission expense means we will pay the expense. So commission paid is 500 rupees. Subbarao is not immaterial. Here, paid means cash. Commission paid in cash 500. In this case, Subbarao is not material. Okay, because there will be no credit or cash credit in like sales or purchases. For expenses, for commission, salaries, no credit like that. Okay, so commission paid. So commission one account and paid means cash one account. Commission is nominal account. See, commission paid means is the expenditure or income? It is expenditure. So what is the principle or rule? Debit all expenses and losses. So commission account is to be debited. Cash is going out. Cash account is to be credited. See here. Commission account, debit 500. Cash account credit. Here one thing is to be noted. In the case of nominal accounts means expenses or incomes. In the case of nominal account, the same item may be expenditure sometimes income. Commission here commission we paid. Sometimes we can receive commission also, isn't it? So in both the cases, commission is nominal account. One is commission paid is expense, and commission received is income. That is why in the case of only nominal accounts, where it is better to maintain open separate account for income as well as for expense. So here commission paid is expense. So for that we are write it as commission paid. We receive commission received, because if you enter in one account, both received and paid will be in one account. Then what to do? Income is different and expense is different. Then you have to segregate. Total the debit side, that is taken as expenditure. Total the credit side, taken as income. Like instead of that, right, separately, both will be separate. That is why commission paid is expenses and cash paid 500. So here commission paid account debit to cash account credit. Okay, cash account credit. Then stationery purchased for 1,200 rupees. Here also see, that's why I gave wantonly purchased. So what you are purchasing? You're purchasing only stationery. Stationery means books, pencils, pens, etc. There's all expenditure, only office expenditure. So stationery and sometimes printing also. We write it as in a combined way. Printing and stationery. Telephones and trunk calls, like that. Printing and stationery, we have to write generally. So stationery account is expenditure. Purchase means it is not goods. It is only expenditure. Purchase for 1,200. Cash is paid. So here what to do? Commission, expense debit. Stationery account debit 1,200 and the cash account credit 1,200. Okay. Then next one. Purchased goods from Ramya traders for 1,52,000. So for 1,52,000 we purchased goods. Here purchased goods from Ramya traders. So purchased goods is called as purchases. Purchases and Ramya traders, they are the two accounts. So here purchases means goods are coming in, debit. So here purchases account debtor, debit 1,52,000. We are purchasing from Ramya traders, they are giving to us. So Ramya traders account credit 1,52,000 rupees. Then last one. Paid salaries to staff. This is nothing but like commission. Salaries paid, expense, debit, paid cash, credit. So salaries account, debit 50,000, cash account credit 50,000. Understand? Like this you have type. Suppose if you want to write journal entries, in the same case, these are all debit, debit, debit. And in the case of credit, we leave some space, we write two capital account. We don't write credit. We don't write CR. That's the instead of that. Before that capital account, we leave some space. Right? To start with two capital account 9 lakh. That's all. This is the form of journal. Deciding this is debit and credit is decided like this. Understand? So this is the problem. You see, one more thing I told you. First of all, you can take screenshot in the laptop or photo in the mobile. Take this problem and you try again. You try this problem again, and then only you check up the answers. And similarly, there is second problem, another problem. Here, I have given try this problem yourself. So you solve this problem, everything will be okay. What I will discuss already. Some cases, a little confusion will be there. So accept that others should be okay. So you take all the others, and what are all little bit confusing. Those solution I will take up in the next class. Okay. This is the problem, and this problem also you take screenshot or photo in the mobile and you try this problem, and whatever is in this case there are 2-3 items. So those 2 or 3 items I will tell tomorrow, because they are very useful in TallyPrime also, not the entry, the method of doing that, of deciding debit credit. So method of doing that you have to require some calculation that is required in Tally also. These entries are just only debit and credit we require. Similarly, here also debit and credit, but some calculations are required. So take the, see, I'm keeping it like this. You take the photo or this one, and you take the screenshot or photo for this also, and you try. So this is the end of second day journal. Okay, and from tomorrow we will take up the next chapter. At day 3 we will take up After posting into the, after passing all the entries in the journal, then what we will do? Then first of all decide debit credit, then record that in the journal, and that so and so account data to so and so account we are recording in the debt journal we are recording. After recording in the journal, then what to do? So that is the next topic. Okay. So in this, so once again I am reminding you, please subscribe to my channel and click the bell icon, select all, and share with all your friends, and view all these videos till the end, because if you see that in the skip that in the middle, you may lose some item. But as far as this fundamental of accounting is concerned, mostly commerce background students will be knowing this. But by viewing this, they will refresh their memory also again. They will refresh their memory, and if they have some doubts in that also, they can get clarification in this. And in the accountants already working, I mean, they are from some other fields, so they can learn well here. Suppose he is a BSc student, MSc, BTech, even BTech students also now they are learning Tally and accounts. That's why. So from other streams, the students can learn well. That's why I am giving in a elaborate way. Totally for these fundamentals in every channel, they will interest one or two videos. But I am giving for 6 days, totally 7, because first day I divided into 2 parts. So totally 7 parts, 7 videos in Telugu and 7 videos in English. And tomorrow we will start day 3. So tomorrow day 3 I will start in Telugu, and then again that we will start in English. Okay. So with this, wish you all the best. Take care. Be safe. Okay. Thank you.